All right, good morning, everybody. How's everyone doing today? Hopefully, you guys can hear me. Hi, John. I'm back at Central Headquarters. Strange feeling, and luckily, no ghosts. Nothing to prevent me from broadcasting. No problems. You never know when that's going to happen. Hey, Miles, how you doing? Crazy, crazy times we're living in. Oil hitting 118. It's come off a bit. Just frantic, fast trading. Got to be really careful. It's very dangerous, actually, to trade like this. But sticking with the trade plan, if you just keep things in perspective, look at all these windows. I got to scroll back just to get to the first trade of the day. Was too fast right here at 9. But the second trade of the day, all kinds of opportunity to grab it right here. 16 seconds in. Hitting its target, 23 ticks to target 1, almost getting to target 2, but real fast and one and done. Took a little over a minute. Not bad. Hey, Johnny, how's it going? So the sound is okay, huh? Everything sounds good? So crude, just trading like crazy, almost up to 300,000 contracts already. Great, thank you. Lots of action in unleaded gas as well. And check this one out, but also very quick, but same type of deal. The second trade, 16 seconds in, same time stamp as the crude trade, and big sell off there, and a really great one and done. Ironically, as petroleum is heading higher, the winners today come on the short side. Nice big winner hitting all 4 targets and trailing down. Looking like a home run trade right there. Thank you, John. Hey, John Ford. So unleaded gas, crude oil, trading like crazy. Especially, look at these moves in unleaded. Nuts. Only 18,000 contracts. We're up to close to 300,000 on crude oil. Unleaded gas still not getting the volume, but certainly getting the range. And of course, the market's opened a couple minutes ago, too. There is that first trade of the morning there on the YM short at 538, trading off the 20 SMA. The stop is at 461. Also moving fairly quick. Just missing. Let's see, money management's at 25 and it got to 26. It missed by 1 tick. Let's see if it could push lower. Kind of sandwiched between the 50 and the 200 moving average. So let's see if it could push down at least a few more ticks to get to the target. Hung up on that quarter century number. It did just hit it. If you're in that trade, you want to move your stop. Well, you should be out at break even, really. Everything's fast today. Everything's fast. Everything's dangerous. 360 a gallon, John. I'm jealous. I wish I was only paying 360. We're looking at gas prices that are pushing on $6 a barrel. I haven't seen 6 yet, but we're getting close. In the high fives. So 360. I'm going to play the smallest violin for you. 360 would have been a dream come true over a year ago out here in California. I know it's crazy to say that, but so unfortunately the YM money management stopping it out, which looks like it was a nice setup to go short, but have to wait for another one. And now that we're 4 minutes in, we can pay attention to the NQ chart. It's probably moving so fast. Everything's super fast. No setups yet. Getting in sync even would have missed that. Wait and see if we can grab one. Oh, that's the wholesale price. Gotcha. Okay. Kind of crazy. Russia is instigating this war, and the whole world is still buying its oil. It's like that was pretty short-sighted that world leaders would even allow that to take place in the first place. Crazy. It's like everyone's complicit in this thing if you think about it. Yeah, John, I mean, that's a good question. Whether you look at longer bars, yeah, it makes sense. There's a short on the NQ, by the way. Didn't trigger in, stopped out. Now there's a long, very fast. Catapult's pretty tough at this speed, but if you grab it just right, you can really hit it out of the park. That's the first trade going along there, and it's got to get to that minimum level to move the stop. Yeah, there's no back testing in a condition like this, right? Because how do you get enough data? How do you get a sample set that means anything? So then it just becomes a question on whether there's a specific pattern. If you're in the NQ, move your stop to break even. In other words, if you specialize in a certain pattern and you are good at that pattern and feel comfortable with it, then you wait for that kind of thing. A specific pattern that tends to follow with a high percentage trade setup. Because certain patterns, it doesn't matter. One and done on the NQ, by the way. There it is, hitting its target 3 and not quite stopping out. Still alive, missing by 1 tick and the stop moving up, hitting target 4. There's your first trade after that 4-minute wait. You had to execute it fast, and they're stopping out. But it's crazy. You can see how fast everything's moving. But back to your question, John, you can learn to specialize on certain patterns, and when they occur, you take them. And if it's a larger time frame chart, a bigger chart, the pattern's the pattern. I mean, certain patterns just work no matter what on all charts, right? Or most. So that would be the way to do it. And again, it's probably not something you could back test easily, although you might find a way to do so. It's a different style of trading, but it's certainly viable. You know, you look for a trending market with it's waving, you know, you got the big action moves. And then when you get around that fifth one, you think a little bit of Elliott wave type of thinking, and that last leg is losing energy. And maybe it barely breaks out above resistance or below support with no follow through. And then you look to take the trade in the opposite direction. So there's an idea. Another idea would be you have a strong breakout and a retracement into some sort of a support or resistance line, maybe the 20 SMA, maybe a 14 EMA. And if it's a breakout where you know action, reaction, subsequent action, and the subsequent action tends to mirror the first action, those kind of trades can lead to good moves, especially early on, because that second leg is usually the strongest, right? You get a good breakout with the first, you have a nice reaction that's 1/3 to 2/3, probably around 1/3 to 50% even, that trades into your line, your 20 SMA, for example. And then you grab the second leg. And if it's the second leg of following the first action move, those could be very good, obviously. You could also look at the 50 EMA as it's pushing down on the 200 and follow the yellow brick road, so to speak. And you could see that right here just happened. So you could see the breakout to the upside without much follow through, the inability to make new highs, the curling down, the 20 SMA actually leading the way, and then the 50 starting to curl down. And, look at the space between the 50 and the 200. There's a good chance that the market is going to test that 200 moving average. The failure to go higher could lead to a strong move in the opposite direction. And then you also got sub-zero all lining up. Sub-zero is when the trend strength indicator gets below -20 on the OSOB indicator. And that's a good chance to get in front of what could be the next breakout move. And then now you got your dots lining up on the 20 SMA. Your action move down, your reaction into the line. Ends up being a nice trade. Now, could you do that on a slower chart? It'd be easier on a slower chart. But it's hard to recognize stuff like this. Like this could be a good setup too. You have your exhaustion dots and these bearish bars right here. And you got the spike to the left of the bearish bar. That's the zero bar, right? In my books, I refer to that as the zero bar. And when you have a spike that spikes up, and then the exhaustion dots set up inside of that spike, right, like that, those are patterns that typically capitulate. As you can see, that's what happened. And you can learn to look for this on a slower time frame. I mean, there's all kinds of patterns, right? You just have to practice them, train your eye to look for them, stack up enough clues. Remember, everything we do, all the strategies I've created, all stack up enough confirmation to stack the odds on your side. What are those pieces of confirmation? They could be a number of things, but they should all be price action based. So everything I've just described to you is all price action based stuff. Failure to get higher, failure to make a new high, action, reaction, subsequent action, finding your resistance and support levels inside of your moving averages that tend to mark them with regularity, certain candlestick bars that tend to form and typically are bearish or bullish when they do, those sorts of things. And you could get really good at certain patterns that just continually repeat on all charts, all markets, all time frames. Does that make sense? I mean, that's really the best way to handle a market like this. And then the other thing you can do is you could switch over to sim mode and start practicing. Practice looking for those particular types of things. Focus on one setup and just follow your chart. Just watch it and place trades as they happen and see if you could execute and see if you can get those patterns right and learn from the experience. And over time, you get better and better at it. I mean, really, that's my favorite way to trade. It's just hard to teach. It's hard to teach so that you can create something that could be, duplicated by others. But the concept is what I just explained. It's just a question of, do you spend time practicing it? And you got to learn. You got to just learn by doing. But think of the big picture. Price action confirmation. how do you stack up enough pieces of information to stack the odds on your side? You can have a little bit of a shopping list of things that have to happen. And if most of those things happen, the trade tends to work out in your favor most of the time. And then that's what you look for. Yeah, that's a spotlight. That's spotlight. That would be SMS, Johnny. Here it says SLOSOB, but for you, I think it's SMS. I don't know. I have to see what you have. But Spotlight Master Suite, that's kind of been the mainstay in the trade room forever. It just works so well. That's the evolution from Counterpunch Trader. Counterpunch Trader evolved into Spotlight. And of course, Spotlight really stacks some interesting pieces in its favor. And that's why these trades tend to, when you have a proven trade plan, it tends to work. But the concept of the trade plans that we do in the trade room is a lot different than what I just described, looking for specific price patterns on whatever chart, whatever market, right? The trade plans we do in here are very specific. This chart, this market, this start time, this goal, you're done. And you could prove that you can quit positive most of the time with minimal trading and minimize your drawdown because of the, efficient trading, one and done quite often. Where that falls short, and no matter what you decide to trade, there's always going to be, but there's always going to be the, well, if this happens, you're kind of screwed, because nothing's perfect, ever. But it's okay to lose some sessions as long as you quit when you're supposed to quit, and you're losing less than 20% of your sessions and winning in the 75 to 78%, breaking even on the rest, you're going to make money. So it's just a different style of trading. It's easier to teach, obviously. It takes a little bit of upfront work, as you know, with the back testing and all that and the practice trading. But we've done it so often, and we've got some trade plans that work has been done and continues years later, and it still works. The trade plans have really stood the test of time, as we've seen with so many of these. Soybeans being a good example as well. As we know, we didn't look at today, but yeah, that went too fast. So the first trade would have been this one, a little bit late to the party, and it just missed target one by one tick. Unfortunately, here's a case where soybeans was unable to win in the first trade being too fast, so the next trade. But then the second trade won. Second trade was a winner. How fast was it? I don't know. Maybe not. Maybe too fast. I don't know. 6 seconds probably. Yeah, so soybeans actually looked like it was problematic today just because it was so fast. But there you go. These are extreme market conditions. And maybe the best thing to do on a session like this is to do nothing. Because these are not the conditions you can test for. So in a way, you're trading, throwing caution to the wind with additional flies in the ointment, so to speak, things in the ingredients that were not supposed to be there, making it harder to succeed with, harder to execute. Just, today's price action wasn't in your foundation building or back testing over the last X amount of sessions that you worked at improving your trade plan, right? So it becomes very dangerous, and you have more elements of luck. It's more like gambling session like today. And, markets do that sometimes, especially when extreme world events occur, as we're witnessing and living through. And the world's going to be forever changed from this. So what's really going to be something that we're all going to experience together is what happens going forward. How is the world going to change? I mean, Look at how the U.S. is talking with Venezuela again, for example. Everyone's in bed with everyone, really. The way this world is intertwined. How the Western countries allowed themselves to become so dependent on Russian energy, and now look what's happening. Kind of predictable because it's human nature. Power is so seductive. You get a guy like Putin, who's richer than God, stealing everything. Did you hear the story that who was it? I forget who it was. A football player with a pretty famous guy. What was his name? He had a Super Bowl ring. Oh, Kraft, the owner of New England Patriots, was at a party with Putin, and Putin asked him to try his ring on, and Kraft took his Super Bowl ring off and gave it to Putin. Putin walked away, refused to return it. Kraft had to have another ring made. Putin stole it right there, just blatant. Thanks for letting me wear it. It's mine now. Walks away. Imagine that. That's the guy we're dealing with. And we're still buying oil. The world's buying oil from him and funding his war. No one wants to pay $10 a gallon at the gas pump, so we're all complicit. But you got a guy like that. Obviously, he's like that. Everyone knows he's like that. Everyone knows he's a psychopath, intelligent psychopath. And yet, these countries put themselves in a position to be dependent upon him. And so power seduces, right? So now look, he's taking advantage of it and doing what he's doing. And the rest of the world's just kind of impotent to do anything about it. They put themselves in that position. We all did. Well, I'm not saying you agree or disagree, but obviously most people disagree. But I don't think anyone wants to pay the price at the gas pump. Anyway, didn't mean to go down that trail. What happened with the YM? Oh, we lost track of that. So the YM. Well, wasn't watching, but it looks like that second trade hit its target. Anyone take that? 22 points. Then it lost. Then it won. So break even, a winner, a loser, which may have happened. That was pretty fast there. Probably untradeable. Just above that little tip, you probably avoid the loss. So looking like you should have ended positive, depending on if those were even tradable. The markets are so fast. What's the point? Again, it's a matter of luck at that point. Hey Johnny, we used to look at forexfactory.com and we'd look at their event calendar. All these news events would come out each month on a regular schedule, and we'd use their red labeled reports. Usually they would come out at the top of the hour, like in the next 6 minutes at 10 a.m. Eastern. And then we'd stand down 2 minutes in front or 5 minutes in front of news, and we'd wait 2 minutes to trade after. But all those reports ended up just turning into orange and yellow reports. That's the color that Forex Factory labeled them with, and they just didn't move the markets really anymore. Maybe the one to pay attention to is ISM. Well, there's two ISMs. Those are still red label reports. Obviously, non-farm payroll, but that all happens before we start trading anyway. So just don't really pay attention to it anymore. Years ago, we used to trade after the news, and usually it was a real high percentage winner. But now, I mean, you can't really test against headline news. It's too random. You have to trust your patterns. You know, the collective wisdom of the market is what's pushing these prices up and down, creating these price patterns. You have to just trust those patterns, the patterns that tend to lead to an outcome on a high percentage basis that's predictable. No matter what chart you use, that's the idea of trading. You got a pattern that occurs. The next thing that happens after happens more often than it doesn't. So now the odds are on your side to be able to predict the outcome of what occurs next, right? You know, if you try to know more than the market, follow the headline news or whatever, it's just going to be an exercise in frustration. The markets often are going to react way different than what you anticipated anyway. To me, that's a waste of time. Just my opinion. It happened with the pound Aussie anyway. Wow, the pound Aussie. I don't know that there was a chance to grab this trade here. It looks like it was a little bit ahead of our start time, but then you got the short, and that hit its 21 pip target, one objective. So the pound Aussie was one and done today. Well, we don't spend a lot of time looking at Forex for day trading. It's just such a slow market, but looks like it did okay. I know I've got a ton of questions over the last week or so from people for various things. Counterpunch trader automation, some catapult questions, and I don't know who's present in the room, but if you came into the room to ask any questions, feel free. Ask away. Look at USO. Of course, this has always been one of my favorite ETFs to trade with options, with Counterpunch. It just wins like so often. You see the last three trades, huge trades. The last one being this one, stretching the multi-year highs. But these options trades are highly profitable. This is double and triple digit percentage returns in a matter of days. You got your setup bar right there when it happens. That was on the 23rd of February. Your entry, 67.34. So you're looking to buy an in-the-money option, 67 or below that, 66. And it opened up way up here, but then it pulled down, giving ample time to get in up to the 28th even. And just rewarding whoever took those. I mean, the options are low price also. So you could probably buy more than, depending on your trading account, multiple, and scale out at the different targets. And I mean, this is the easiest money to make, really. because you don't do much. You place the trade, you put in the conditional order when the stock hits the price, sell the option, and cancel the stop. That's it. Learn how to do that a few times, and now it's just too far extended. It'd be nice just to jump in and grab it because it's probably going to go higher, but it's just so far up. Just wait for your setup, wait for the next one. IWF, obviously on the way down. This is not tuned up to a $300 stock, so I mean, those exhaustion dots might actually give trades if you gave it more than 2 cents. Maybe give it a $2 or whatever. Sometimes you got to adjust the parameters of the calculator to make sense of the scaling of a high price stock. Not that this is super high price, but it's probably higher price than what warrants a 2 cent stop. That's going to move your exhaustion dots closer to those lines and produce a trade. Volume. I don't know what you'd want to do with that, Johnny. You want to be careful that you don't overthink stuff. There's like no volume in unleaded gas to begin with anyway. Yeah, that's John Lazar. Ninja John. You'll notice I don't ever look at volume. A lot of people ask me about that. I'm like, you can if you want, but it's just another one of the. I mean, I'll tell you what. When I look at volume, when I'm looking at a classic pattern like a slow moving head and shoulders pattern on a daily chart, there are traditional volume patterns that occur that help confirm a head and shoulders pattern. I really don't look at them that often. I just don't find it to be as dependable as maybe it's just my style of trading. The price pattern itself tells me what I need. Bitcoin's been living below the 200 moving average now for quite a while. Back in here, Bitcoin looks poised. I mean, look, it's either finding support in here, and the bulls are really, they're picking up anytime it drops below 40,000, the support. But if that support capitulates, and you can see that Counterpunch already has a purple trade with the exhaustion on the 200 moving average, which we've seen more than once, and the 50 keeps pushing lower, and there's a little bit curling down in these lines. There's some headwinds. I mean, it's just hard to know because the high trend chop indicator is at a much higher level. So you have a little bit of divergence, but it's been coming up, but the market really hasn't moved higher. And it's really finding overhead resistance at this 200 moving average. So it's possible Bitcoin capitulates lower. And I would say these targets, I mean, there's a short right there. These targets, I'm not going to argue with Counterpunch. These targets are so accurate. Even the short way back in here predicting target 3. Well, look at what it spiked down through before it found support. Is it going to test those levels and break through? I don't know. It's interesting. What did I do? Oh, I just messed up my workspace. Totally messed up my workspace. All right, well, let's look at what we got here. XLF, this is another one that just trades really well with counterpunch. This is the financial spider, right? ETF. Definitely taking a hit. The financials selling off. Unfortunately, the short right here gapped through the entry. No way to trade it. Already hit target one, so got to wait for another setup on that. Yeah, maybe Johnny. I don't know. It's easy to get lost in semantics. Four contracts is not what the trade plan allows unless your own specific trade plan, and that's provided you have the capital and a proven trade plan that you could execute without mistake. So I'm already seeing a problem with the idea because knowing what I know about you and where you're at with your trading, I'm saying you probably need to focus on one contract. One. And get that dialed in. Earn the rights of passage to increase that over time as you hit milestones. Trying to trade four contracts is asking for trouble, especially when you have a stop and reverse. That's going to be really hard for you to execute. What did I do? I have to fix this now. Anyway, just saying. Remember, you got to learn how to crawl before you learn how to walk. You got to learn how to walk before you learn how to run. Don't jump steps. Don't skip. Yeah, forget four contracts. One, get one dialed in. Four will come when it's time to come. I clearly have too many charts open. $69,000 contracts on the micro Russell. Oh, let's take a look at this. The 10 a.m. crude oil mini session kind of came and went while I was talking. That's too fast. That's way too fast. 1 second between here and here. How about this one? I mean, with all those bars, by the time this one closes down, it's been 11 seconds past. Probably too fast. I don't know. This one here, 10:02 in 1 second, 3 seconds, 22. Yeah, this one you could have traded. and it would have been a 1-tick winner, not a 1-tick winner, a 12-tick winner to target 1 if you got filled. And then the next one, also too fast. This one, too fast. So all these trades happening in here, most of them hitting targets 1 or more, but how do you execute on them? And this one here, probably, maybe you could have executed. I don't know, but you would have lost. But by then, hopefully you're not throwing caution to the wind. The next trade, too fast. Can't even execute it. This is what I'm talking about. Fast market conditions. This one here, 10:05 and 5 seconds. 14 seconds in, it's already below. You'd have had to execute quickly. Maybe you could have grabbed that. This one here, too fast. Can't even trade it. So this is what we're up against. That's just what's happening today in the markets. Should even bother with sniffing from the start. I don't know what you mean by sniffing. The 3-step sniff test is a very specific process. There are very clear steps, and it's designed for one thing in mind: to sift through a list of trade plan possibilities and determine the ones that have the most potential to succeed. Which ones can you quit with a positive result a vast majority of the time with minimal and efficient trading, so you can control your drawdown. So you have a set very clear list of rules: start time, stop time, chart, strategy, goals. I'm in the sniff and backtesting stages. A benefit to understanding 4 contracts, or in the case of training video with Barry equals 30 contracts in the UTA. This understanding, which, yeah, you're just jumping way too many steps forward. The whole idea is to find a very simple approach that you could grow your account with minimal trading. And it starts with 1 contract. Learn to trade with training wheels on first before you take your training wheels off. The more contracts you put on a trade, the more likely it is you're going to lose all your money, unless you've gone through the steps and have gotten to the point where you're ready to give yourself a raise by moving your finger from the 1 to the 2. You don't go to 4 contracts until it's time. And that happens when it happens. Exactly. The sniff test is how you answer the question of, which I get all the time. I wish I had a straight answer for everybody, but there is no straight answer. And the question is, what should I trade? If only it were that simple. That's what the sniff test is meant to answer. What should I trade? How should I trade it? Well, the how should I trade it part, it depends on the strategy. Obviously, that's one of the things you're trying to answer, and you use a sniff test to help you with that. But for sure, built into the answer is with how, what do I trade? How do I trade it? Small. Very small. Even when you go large, it's still small as a ratio to your available trading capital. I always talk about risking 2%. So if you have a $10,000 trading account, you can risk $200 on a trade. Most of what we're looking at in here, that's going to be 1 contract. Or it may even not even be able to afford 1 contract. in which case you have to risk a little more than 2%. 2% is an average. When you've grown your account to $15,000, and it might take 6 months, because you at the beginning of the ramp stays low to the ground. The upfront part of trading is the hardest, takes the longest. Eventually, you grow that account to where you can now, 15 grand, you could risk $300. Maybe that'll be 2 contracts on some trades, etc. You hit the exponential curve. Once that happens, with every winner, you're increasing your position size, but you're still staying within the 2% ratio. But that's when you hit the exponential curve. That's down the road. That could take 8 months. I don't know. Depends. So the sniff test is about creating that plan that you could execute flawlessly day in and day out. And the sniff test is just meant as a starting point to identify the chart that you're going to then commit time to with the UTA, with your practice trading. You got to build it the proper way. Most people don't. Most people fail. That's a pretty big clue. I mean, I would look at, you want to sniff test probably 8 to 10 potential trade plans and let the 1 or 2 best ones jump out at you and present themselves and beg you to pursue them further. The answers come. I mean, anyone can shoot from the hip and say, yeah, do this, yeah, do that. And it's usually going to be bad advice. What isn't bad advice is spending time on really investigating and doing that foundational work with the sniff test that you're doing. But do it the right way, and don't get these big illusions of, hitting the ball out of the park for a while. It's going to take time. All businesses take time to grow. I don't care if we're talking about my typical local dry cleaner or any other business. You don't just start making money when you open your doors to the public. It takes time. Trading's like that too. I think you need to review what the sniff test is. The questions you're asking are just, there's no answer to them. I could say, yeah, do this. Yeah, do that. And it's meaningless. What do I know? You have to get to those answers. It's easy to take the default settings and do a quick 20 session look. I mean, when I start a sniff test, I'm looking to see if there are enough trades, maybe there's too many, maybe there's not enough. Are the trades an appropriate size? With those 2 questions, you could pretty much determine if the trades are mostly tradable. Then you could take that and look at 20 sessions, and did it win most of those 20 sessions? If it did, keep investigating. If it didn't, try something different. Why didn't it win? Was it getting to the entry too soon and stopping out? Would a bigger entry have avoided some of those? Is it barely stopping out and then going to target? Is a little more room with moving the stop to break even going to help? You have to just go through the steps. There's just no single answer, and the markets are always changing. Look at what we're dealing with now with the war in Europe. What might have worked 3 weeks ago is you could hardly trade these plans now, given today's market condition. But that's just today. How long will it last? I don't know. Think of what happened with COVID. The markets were untradeable then too. You couldn't even trade the front month on crude oil. How are you going to backtest trading 2 months out? I mean, we're still back to the original plan, but there were a couple months there that was like, you can't trade this. Johnny, maybe you need to be a student of the strategies and learn the strategies. Learn what they do. Become masters of your tools. What does this input do? What does that input do? Because otherwise, what are you testing? You have to know your strategy too. I mean, maybe the fast test is too many steps down the road do you know what the inputs do? Do you know how the strategy, what it's supposed to do, the spirit of the strategy, what the idea is of the strategy? It's in the name, really, but understanding the strategy helps you deploy it better. Yeah, certainly different start times are good ideas. And when you're fast testing, let's say you have something that looks pretty good. I mean, looks like it works. Looks like the trades are going to give you the chance to quit positive most of the time, with 1 to 3 trades, maybe sometimes 4, get done quickly. You could fast test different start times all in the same fast test, just keep a different count. When you're looking at a day's chart, you want to look at this and that. You could also use the automation and give yourself, you could optimize and give yourself some clues as to where to put those inputs. Using the automation helps answer some of those questions. It's not perfect, but it definitely helps eliminate what you don't want to focus on and gives you some, a signpost that points you in the direction of, a 6-tick entry really massively increases the results. With unleaded gas, one of the things I've noticed is that you have to give a bigger stop and reverse adjustment. Like I'll give up to 10 ticks. I'll look to my left and see if there's support and resistance to work around, and then try to adjust around that and stay in the original trade if I can. Those are all questions that you can't answer them with automation. But once you get a few inputs that give you a starting point, you can optimize start time, you can optimize power of quitting, you can optimize your entry and your exit. You could even optimize different catapult lines just to have some alternative ideas. Then you use your eyeballs and you have to look at your chart and see, how do I really make this work? Gee, this would have won if I just wouldn't have stopped and reversed without adjusting around the obvious support and resistance. You could see it. You make that little adjustment, you make a little rule, and then see how that affects your fast test. It's a process. It's work. It's effort. You have to use your brain. You have to learn. If you want to trade unleaded gas, you should be, during the time you want to trade it, watch it. Watch it every day during that time. Watch how it behaves. What you learn from that alone is going to teach you more than anything I could tell you. Johnny, I think I would take notes and observe. I've gone through fast tests a number of times before getting to the one that makes sense to me as I'm watching. Because every time you make a change, it changes something else too. Like if you have something that's already working, then be careful to change anything. And if it's not already working, you got to ask the question, why isn't it working? Start with big picture questions. The little minutia details, you can't expect to get them all right. You won't anyway. Over time, 6 months from now, you'll be better at it than 6 weeks from now. You have to give yourself the opportunity to improve and get better. And that only comes with experience. You can't teach time and experience. You get that by acquiring it over time. You get experience. No one's going to be able to give you those answers. No one. Only you. You'll get them. But if you're struggling to find something that works because you don't know when to stop and reverse and how to do a stop and reverse adjustment, then that's what you spend time working on. Learn what that concept is. Why do we do it? I mean, there's a simple concept. We want to stay with the trade we're in. We want to protect the trade we're in. So instead of instantly reversing in the opposite direction, we ask for additional price action confirmation and see if the price action can prove. And even then, it's not even proof. It's just giving more clues that it really does want to reverse. That concept gives people a lot of problems. But if you think about it, you have to be clear that it's not fear that's preventing you from reversing. At some point, you have to realize the strategy knows more than you. But you still want to protect the trade you're in and not reverse without additional confirmation. So those are hard concepts, but you learn them with time and experience. Yeah, maybe you need to start with just the first two questions, and then if you answer positive on those, look what happens over today's session, yesterday's session, and the last 15 sessions going backwards. And then if it looks like it's winning a lot, maybe put that on the list of, I should fast test this. And then look at something else. And try to build up a list of contenders. We could talk about it when I call you in a little while after this session, Johnny. It's easy to get overwhelmed, and that's the thing you want to avoid. Especially when you're trying to learn how to trade in a market like this. Well, I know that there were people that had questions about counterpunch, but nobody is in here asking me, so I'm assuming that person's not here. And just back to your question about making little adjustments in the middle of a sniff test, it's a really good question. It's an important question. I wouldn't do it, but I would certainly observe. Like you could create a separate column of did it help me or not, and just start counting. If I made the adjustment, it would have helped me. If I made the adjustment, it would have hurt me. And going forward, a fast test doesn't always have to be, do you quit positive most of the time? I mean, that's ideally the goal, but you could use fast testing to answer all kinds of questions. That's where when you take notes, you're writing down observations and questions that pop up in your mind. Gee, if I would have made a 6-tick stop and reverse adjustment instead of a 4-tick, I would have stayed in a winning trade instead of losing 2 in a row. That 6-tick adjustment pushed me below support. Those are things you're just going to have to observe and learn. I mean, it's like I can't teach you a foreign language and just answering questions in a chat room. Those are really good questions, but usually the answer is just keeping it simple and not getting bogged down in minutia. Because a lot of times those questions come up because a losing trade happened and you're trying to avoid the losing trade. And that's a mistake. No matter what you come up with, there's going to be losing trades, and that doesn't mean it's a bad trade plan. So that's something you have to be very careful about. You have to be sure that the questions you're asking and trying to find answers to are not cloaked with the motivation of pursuing perfection. That's a mistake. So most people do. Let me fix this so the last few trades didn't lose. Let me fix this so the last session didn't lose. Well, if you just won 8 sessions and the last session lost, don't fix anything. Just keep going forward. Don't ask questions and look for answers because you're afraid of losing. We're not trading to avoid losses. We're trading to make money, and that means creating a trade plan where you can quit most of the time positive. Most of the time. Not all of the time. Good luck with that one. That's a foolish pursuit, so we're not even going to bother. Most of the time. So when you're asking questions, make sure it's not coming from this position of fear of loss and trying to avoid losing trades. No, you're just trying to stack the odds a little more in your favor. Just increase that win rate another percentage or two. Makes a huge difference. Just avoid some losing trades by cleaning up the noise a little bit if you can. Those are the little tinkering things that you can do, and you may not know the answer right away, and you don't need to know the answer. You could discover that with time and experience. Hopefully that helps and makes sense as far as your thinking. It's easy to get cluttered. And just think, and then now you're a deer in the headlights of an oncoming car. Any more questions, guys? I've been with you for about an hour. Yeah, John Ford, those are words of wisdom. You're right. The questions come after a losing trade. And that's that whole thing about being the guy trying to trade instead of just being the CEO of your trading business. The dry cleaner doesn't change their business to a delicatessen when the lady is irate that you couldn't get the burgundy wine stain out of her white blouse and she vows to never walk into your store again. That doesn't make you throw your hands up and close your doors and tomorrow you open up as a submarine deli shop, right? I mean, it's the same concept. It's just a transaction. That's why you put on very small risk. Small, so that you could survive the bumps in the road, the kick to the shins. You're going to get kicked in the shins. You just don't want to lose your legs, right? It's okay. You wear shin guards. But always, these questions come up when you're dealing with that acid reflux, pit in your stomach, even when you're back testing because you experienced a trade plan that's supposed to win and it just lost 3 sessions in a row. And that's going to happen no matter what. Even a trade plan that wins 90% of the time is going to win 3 sessions in a row. It's going to happen. Do you throw out the plan that's winning 90% of the time because it lost 3 sessions in a row? Hopefully not. Do you change anything to avoid those losing 3 sessions in a row? Only to your own detriment. And then you break the trade plan that was winning 90% of the time to begin with. 90% of the time means it loses 10% of the time. That's a money-making business most of the time if you're making enough money on the winners and not losing too much on the losers. Hopefully this was helpful. Hope you enjoyed the session. I just got back after being away for a while, so I got a lot to do. I'm going to have to say goodbye to you guys. Start answering some emails, etc., etc. You guys have a great day. John will be in tomorrow. I'll be in Wednesday. John will be in Thursday. Looking like we're having a full week of the way it's supposed to be scheduled. Feel good about that. So I'll see you on the next session, guys. Everyone have a great day. Please give a thumbs up. Like the session. See you next time.